Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty, so let's actually talk about this most powerful trading technique that that I use, and it's been something that's made a massive difference to my trading and the success in my trading. And one of the biggest things for us, right? We want to be able to do whatever we can to stack the odds on our side even more, right? So to have a really good win-loss ratio, but we also want to have the probability of when we do have successful trades, we want to try to maximize our profits and also cut our losses short. So this number one thing that I use on every single time I'm getting involved in markets is simple, basic, but powerful, what I call trend analysis in the markets. And it surprises me so much after all this time, my trading, and also doing coaching as well too, how many people know this or maybe not understand it, but they may even understand it, but they simply just disregard it and completely focus on all this other stuff out there, which is all these indicators and the commitment to traders report and the fundamentals and the inflation data and all this sort of stuff. But as a trader, right, as a trader in the markets, the number one thing that we must understand is reading the markets itself. And from just doing this one thing, it helps you stay on top of the market of, okay, then are we still in a bull market? Are we in a bear market? Who are the buyers in control? Are we still in an upward trend? Or maybe no one's in control, it's just going sideways. Or maybe there's a bear market likely to start. And so this is one of the major things that has helped me do so well from trading, and what's helped me be so successful out of trading is simple, basic, but simple trend analysis. So let's actually walk through this here. In a bull market, what you will see on the charts, and we'll go to the live chart in just a minute. But in the bull market, what we tend to see is the market rally up. So it might do something like this, like that, and then we'll get a pullback, and then we'll get a rally up like that, and then we might get a bit of a pullback like this here, and then we'll rally back up again. And as you can see, the market is making higher lows and higher highs. But the most important part to this upward trend is the higher low. As long as the market keeps making these like that, like that, as long as the market keeps making higher lows, then the bull trend, the bull market is still intact. Now, one thing that a lot of people get wrong is they focus too much on this. Just because we have these pullbacks in the market, and pullbacks in the markets, just because we're getting a pullback in the market, they think, oh, the trend's over, the sellers are now in control, and now we're going to crash and we're going to go down and it's all over. That is the wrong thing to do, because what happens a lot of the times is, as you can see, the market makes a higher low, we rally up, we just get a pullback, and that's the way the markets work. So if we're in a bull market and we get a pullback, there's a high probability, probably 80% of the time, the market's going to continue that trend. That's why most people who call the top, and I'm not going to put names here, they're wrong, 98% of the time. Why? Because as long as the market keeps making these higher lows and higher lows, the market is in an upward trend and the bull market is continuing. It's not until we actually start to not make higher lows that's when we can start to see a potential reversal. So make sure you watch out. I think it's not tomorrow, but the next day, I'm going to talk about the powerful reversal method, and I'm going to talk to you about how to identify tops and bottoms in the market. So keep an eye out for that. So this is a bull market, and this is where most people go wrong. So in a downward market, in a downward phase, we generally get this here, right? Down, and we get a pullback, we get a lower high, down, pullback, lower high, down, pullback, lower highs. And so, as you can see, the market is making lower highs and lower lows in the market. But the most important part to this trend is, as long as the market makes lower highs, the sellers keep knocking it down. As well as the upward trend, you can see in an upward trend, as long as we're making higher lows, that's the most important part to an upward trend. In a downward trend, the most important part is a lower high. Let's do this here. Is a lower high and a lower high and a lower high. As long as the market keeps making lower highs, then now we're in a downward trend and the sellers are in control overall. And now on the flip side, one of the biggest mistakes that most traders make is they focus on these pullbacks through here. Here's the market pulling back against the downward trend, a bit of a pullback against the downward trend, a bit of a pullback against the downward trend. And they focus so much on the pullbacks, but they're not looking at the bigger picture enough to see, oh, look, the market is pulling back, but look what happened. We dropped down. Now we're having a pullback. And this pullback here, this may even last 2 to 4 weeks, you know, as the market slowly pulls back. But the overall underlying trend is knocking it down, knocking it down, knocking it down. And the market is going in a downward trend. And it's so surprising that most people don't focus on this enough, because it's the one thing to help you identify good entry points, but also to help you identify, you know what, just because we are rallying right now, there's probably a really good chance that the sellers are going to come back in and go for another, what I call another drop, right? So you can see here, market comes back down and then drops back down, rallies back down, and we drop back down, and then we drop back down. And so here is the basic simple analysis of this move. As I said before, let's quickly recap here, and then we'll go over to the actual live charts, and then we'll actually use this as an example here. But in an upward trend, we have higher highs and higher lows. But the most important part is a higher low. As long as the market's making higher lows, then the market is in an upward trend, and the bulls, it's in a bull trend. The bulls, it's an upward trend. The buyers are now in control because they're just stepping it up. In a downward trend, the most important part to you as a trader is making lower highs, and lower highs, which is a downward trend in the market. So let's actually go to the live market, to the live charts right now, and then I'll share with you exactly. We'll identify this in the live market so you can actually see it as well too. Now, what we're looking at right now is simply a chart. Now, it doesn't matter whether it's a weekly chart or daily charts or an hourly chart. You use the same formation and the same analysis. Now, there's a few things here really important. The reason why I wanted to use this chart as an example, that's really important to understand when identifying these highs and lows. So we're looking at this particular chart here, and we can see, notice how on this particular chart here, notice how if I draw the trend, notice how we have like a little higher low here and a little higher low and a little high. See these little higher lows all through here? Well, that's what I call little or non-significant higher lows. Notice how we have these big swings up, big swings down, big swings up, and then the market goes up, 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 up. Notice how we have these much more major swings. That's what I call the major highs and lows, and they're the ones we want to be focusing on. Not when the market does this, but when the market does this, and like that, we would say that was the low, and then that was the last significant low. So that's the one I'm going to be calculating as I'm identifying the simple trend analysis in these markets. Make sense? So let's have a look at this here. So it's not these lows. So if I'm going to be drawing the highs and lows in this particular market here, and so if I'm going to be drawing that, this is how I would identify it. I'll be drawing from the low to the major high, to the major low, the major high, major low. As you can see, right, we had these small little highs and lows, but we didn't really count. This major low here, big swing up, we had a swing down, we came down, we made a big swing up, big swing down, big swing up, and now look what's happening right now. Even on this particular chart here, we're swinging up. So if we have a look at this particular chart here, we're noticing that now this is a daily chart of a particular stock, and it doesn't matter if it's a Forex market or crypto market, they all operate the same way, right? There's the same humans and same machines pushing across all different markets out there. But look what's happening here. We had this low, and then we have a higher low. The market pulls back. Look here, we create a significant higher low. Now it's very close to making a double bottom, but it didn't. It made a higher low. Remember, in an upward trend, the most important part is a higher low, and then we have a higher low, and then we have a higher low, and then we have a higher low as well too. So as you can see, throughout this point in time, all through here, the market was making highs and higher lows. So the buyers continued and still to this day are in control. They have never lost control in the market. So if I take everything off the screen, as I was saying before, one of the big mistakes that a lot of people do is I'm zooming in right now, is they do that, right? They're zooming in and they may only look at the last sort of, once again, this is a daily chart. They may look at the last sort of maybe week or 2 weeks and they sort of get worried. So they may only focus on, if you're zoomed in too much, like here, then on this period, on this downward phase through here, you're like, oh my goodness, the top's in, the market's crashing, oh my goodness. And then the market rallies back up and then, oh my goodness, the market's getting smashed. But one of the most important parts to a trend analysis is seeing it from the overall picture. This is too close. If we take everything off the screen and we zoom out a bit to get a lot more data, which one is it, data or data? I don't know, right? And we squeeze it up like this, look what we can see here on this particular chart. We can see that once again, the market has continued low, higher low, and these pullbacks here are just simply a nice, healthy pullbacks in a nice, big bull market. And the buyers have continued to stay in control because even though we get these pullbacks, the buyers have been in control ever since. All right, so let's have a look at now from a bearish perspective. Looking at a bearish trend and the most important parts to identifying in a bearish market. Now I've used this one as the example because it's a lot more messier, but again, I'll be able to share with you exactly how to see it. So initially, what did we have back here? We had what? We actually had a very nice upward trend, didn't we? You can see how we actually were starting through here. We actually ran up and we came back down and we ran up. So notice how the buyers were in control here, right? Higher lows. And the market ran up and then the market came back down. But notice how we ran down and then we ran back up. Notice how we had a higher low and a higher low, right? So same for the bullish trend, highs and lows. But look what happened here. Look where the market changed. It rallied down and notice how we're now breaking this low. So we're no longer making higher lows. Higher low, higher low. What is this? This is now what? A lower low, but also we created what? A lower high. So notice how the trend has started to change here. This is where the overall trend changed. And again, not tomorrow's video, but the video after that, the trading after that, I'm going to really, really help you when it comes to reversal points. And there's a bit of a hint there. And I'll walk you through more of that in a couple of days from now. But as you can see, right, now we actually dropped and now we're in what? A downward phase, and then the market rallies back up and then we rip. And then we rally back up to create a double top. We didn't break a low and then we ripped down again. And then we rallied back up again and then we ripped down again. And now we rallied back up again. So as you can see, just by looking at this particular market, and again, I wanted to use this because you can see it from a bullish trend and then now into a bearish trend. As I'm looking at this chart, we can see we had a low, lower high, a double top. We didn't break the low, we didn't break the high. So therefore, the sellers are still in control, but they're holding on here. Then it drops back down, rallies back up. Look at this here, lower high, rally down, and then away we go. So as looking at this particular chart, you can see how we went from a nice bullish trend and then now we went down through a bearish trend. And this is actually just watching the market to see, okay, who's in control. We've got bulls, we've got bears, and focusing on that. And going through this here is one of the most important things, because if we can see the markets in a bullish trend, as an example, and we are getting a pullback, well, then we know in the back of our mind, there's a really good chance that the buyers are going to kick back in again to continue the upward trend. Same here, right? We had the market coming down. So we had the market rallying down, rally back up, rally down, rally back up, rally down, rally back up. So as you're getting these pullbacks, you could be keeping in mind, like, hang on a minute, yes, we are getting a 2 to 4 week sort of rally, short-term rally here, but the market's still in this overall downward trend, and just by looking at the charts. So the last thing I want to, again, I hope you enjoyed this here. Make sure you watch this video a few times if you have to. But the last thing I really want to sort of help you with is take everything off the screen. You don't look at your indicators, the volume. You want to remove, most people have grid lines. Notice how people have grid lines like this, and they have we have grid lines like this through here, like that. Right, we have all these grids, and then you have the code right here. Notice how it looks really, really messy. If I take everything off the screen again here, look what's going on. I have noticed how that I've actually made the chart very, very clear. So I've taken the horizontal and the vertical grid lines off. I've taken the code off this here, and I've just have the open, highlight, close, or it could be candlesticks. It doesn't really matter, but just make sure that they're black, because we don't want red and green here. We just want to focus on what? We want to focus on the trend, who's in control, and we want to focus on, okay, this is what the market is doing through here, and we want to make sure we're focusing on what? The major highs and lows in the markets, because it's the major highs and lows in the markets, not these short-term rips and drops and rips and so on and so forth that are important. It's the overall flow, which is lows and highs, and are we in an upward trend? Or are we in a downward trend? Or sometimes we can simply go through a sideways phase. And here is a great example of what we call a sideways phase, where there's no one in control. We're not in a bull market, which is making high lows breaking past previous highs, which is this, highs and lows breaking past previous highs. Or we're not making downward phase, a lower low breaking past previous lows. We're not doing that. So in this case, in this example, there's no one in control. Yes, we did have a movement up through here, and then you can see we had this movement through here. We went sideways, but it really rallied up from there to there. You can see how we had a bit of a pullback here, a rallied up, then we had a pullback, which is a double bottom. Now look what happened here. Notice how we had a double bottom, but we just started doing what? We just started going sideways. Notice how when we're not really doing much through here, right? Remember, we need a high and low breaking past previous highs for the bull trend. We need lower lows breaking past previous lows, breaking past previous highs, breaking past previous lows. Notice how we had a double bottom, but then we didn't break past previous highs. Now we had a double top, but then we made a higher low, but then we made a lower high. Notice how it's getting confusing here, right? It's like, oh, this is now where there's no one in control. This here is the worst time to be trading the markets. Why? Because there's no probability that the trend is going to go up. There's no probability of the market going down. We're just stuck in a sideways phase. And a lot of traders make this big, massive mistake of trading this, thinking that they know the market's going to break out, instead of waiting for the market to break out. And so, for example, over here, the market breaks out, then we have a bit of a pullback, and then we go for a breakout again. We want to see something like this, and then a pullback like this for the trend to start, for us to jump on the trend. If you're getting in this here, there's a really good probability that most of the time you're going to get chewed up, because it's probably not going to go up a lot or down a lot. You're probably going to get stuck sideways, and you're going to get stuck just being frustrated. Always wait for the market to tell you, okay, now we're starting an upward trend. Now we're starting that, all right? So in this case example, if we did have a sideways market like this, we want to either look for a nice little higher high, higher low breaking past previous highs, which is now what? Starting a new bull trend out of this sideways phase. Or we want to see the breaking down and then make a lower high breaking past previous lows, which is now starting a downward phase. This is the best time to be jumping in, because the market is now starting a new phase, and it's massive high probability that now we're starting, in this case example right here, we're starting a bull trend or a nice bullish move. Now there's a probability the market's going to go up. Or we're starting a bear trend, or the bear is in control, bearish, which means sellers in control, and now there's a probability the market's going to go down. Make sense, guys? So I really hope you enjoyed today's free training. When it comes to that, make sure you watch this video a few times if you have to, because we did go through a lot. But guys, I promise you, most people out there are complicating this way too much. Mastering this one thing
is literally 80% of your success in the markets when it comes to understanding. If we can just wait for someone to be clearly in control, nice clears, highs and lows, upward trends, downward trends, and so on and so forth, then we have a much higher probability of jumping on a really good